If you're running a service business doing over $1 million a year, chances are you're overpaying on taxes by at least $50,000. And I know that sounds insane, but hear me out. For context, I've helped multiple agency owners and consultants save 17 to 60 grand in taxes. Here are some recent results below that I've gotten for a few clients. So it's fair to say I know a thing or two about how service businesses can legally pay less taxes. And here's the thing, most service providers think that saving money on taxes, it requires constant optimization, tracking every receipt, or spending hours with their CPA every month. But that's complete BS. The reality is you can save over 50 grand in taxes with just a handful of structural changes you set up one time and benefit from year after year. And in this video, I'm going to show you the simplest but most effective way to save $50,000 in taxes as a service business doing over $1 million. So let's get into it. So what makes a tax strategy simple, and why is that what you really want out of your plan? Before I show you the simple way to save 50 grand in taxes, let's talk about what actually makes a tax strategy simple and why that's exactly what you want. So first, you want it to be set and forget. You don't want to be constantly tracking receipts, categorizing expenses, anything that requires a ton of manual work week in and week out. A truly simple tax strategy is built on structural changes that you set up once and they work for you automatically year after year, practically on autopilot. And you don't need to be a tax expert to understand this. So look, you didn't start your business to become an accountant. You should understand anything that you're implementing at a high level and at least a general idea of it, not something that only an advanced CPA can ever understand. That just isn't what you want to have in this case. And you want to get massive ROI for minimal effort. So some CPAs are going to tell you to maximize write-offs or deductions. You could save maybe $1,200 doing something like that. Or you could implement one strategy and save $27,000 every single year and get a 22x ROI for a fraction of the effort. And this one doesn't require, looking at all the latest tax hacks, crazy deductions you have to do. Instead, again, set and forget autopilot for this. And what most agency owners and consultants are doing instead is they're trying to do the manual stuff. They're tracking every single expense. They spend hours reviewing their numbers and constantly try to optimize the littlest tiny details. And while that's important, it's not the big needle movers here that you should focus on. Meanwhile, you're missing out on 50 grand in tax savings because no one told them to focus on structural strategies. So they get to piece together a tax strategy with their CPA, but they end up getting bad results or they burn out because it requires too much effort. What you actually want is the complete opposite: less effort, massive results. And that's exactly what I'm going to be showing you to do with 5 different changes you can make. So the first structural change is entity restructuring, especially the S Corp election if you're an agency owner, coach, or consultant. As much info as I see about this online, I see dozens of videos, YouTube videos, posts online about it. I still, when I'm doing audits with agency owners and consultants, it's still the number one missed opportunity I see with them. And it's such low-hanging fruit. So let me give you a real example. So I had this agency owner client recently. He was a sales consulting agency and he was operating as a single member LLC. He was pulling in about 250 grand in revenue and about 100 grand in profit. He's paying self-employment on every dollar of that profit that he was making, which was 15.3% on top of income tax, and he was based out of the state of Virginia. We restructured him as an S Corp. We set a reasonable salary and the remaining profit was shifted, and that one shift saved him almost 6 grand in that year's tax bill. So here's proof of it with a screenshot showing right there what he had saved. And he gets that now every single year going forward. And that's just at that revenue level. Think about if his profit was even more than that. What if it was 200,000, 300,000, 400,000? This savings right here would multiply and he'd be able to save even more. He set it up once and he benefits forever. That's simple tax savings done right. So the second change that you can do is owner's compensation optimization. It kind of plays into the S Corp structure that was changed before. This is just optimizing how you get paid off of it. So there's really 2 scenarios that happen here. Either you pay yourself too much salary and then you overpay on payroll taxes, or you pay yourself too little and you risk getting audited and getting penalties. For most agencies over $1 million, the sweet spot is generally 30 to 40% of net profit and the rest as distributions. But again, this is another example of something you dial in once based on the specific situation. You know how much you're going to make for the year, how much you're projecting. You take a percentage of that. That's the number you set aside. You might need to update it 1 to 2 times a year if your profit keeps going up, but this is nothing crazy. There's nothing over the top going on with this one. The other structural change is the retirement contribution strategy. So, this one I find to be a little controversial because not everybody wants to do it. However, it's really easy, low hanging fruit. So, it's kind of pointless to avoid it in some aspect of your strategy. So, here's how I see this play out. So, the first phase I see someone go through is no retirement plan. Generally, you're below 100K in profit. You're either not investing anything or you're just putting all your money into a simple brokerage account. When you're doing this, you get zero tax benefits off of it, but you don't need to at that level. It's when you start getting into more revenue, more profit, and the tax bill grows that you start to look at phase two here, like a basic IRA or a 401k, because it's low hanging fruit that you can deduct off of your tax bill every year, and you get to keep that money and build wealth off of it. Whether you like to put it into the retirement account and save far in the future, or if you don't like that at all, it's just worth doing for this. And then say your tax bill keeps growing even more. Your business is exploding, revenue's going up, more profit, and you want even bigger tax deductions. Now you start to look at advanced plans. Things like a defined benefits plan might benefit here. So as an example, say you're now doing 1.2 million in revenue, you can implement this defined benefits plan. And it can allow you to contribute 150 grand to retirement tax deductible instead of maybe an IRA or others where you can only deduct 8,000, 10,000, 23,000. This one you can put a lot more money into. And at your likely tax rate at that level, you can save almost 50 grand in taxes that year off of one move that you do there. Set it once, you make your annual contribution every year, and you save tens of thousands going forward. Another structural change is family employment and income shifting. This one is very powerful, very overlooked tax strategy that you can do if you have these conditions set. So like this only works like if you have a spouse. So if you have a spouse, you can put them as a W-2 employee. And as an example, you can write off their health insurance premiums. They become deductible to you and you get the benefit from that as well. If you have teenage kids, you can hire them in legitimate roles and pay them up to the standard deduction, which is about 16,000 in 2026. And that means that income is taxed at 0%. They don't hit the higher tax brackets. Basically, when you do this, you're shifting money from, say, a 35% tax bracket to their 0% tax bracket. And you can set these employment relationships up properly once with documentation, and you're golden going forward. And this one, it's simple and it starts to help other people in your family and yourself. So it's a double win there. And then finally, the last structural change is quarterly tax planning and not just annual filing. So this is the meta strategy. This is what makes everything else work and it trickles down from here. You need to shift from annual tax prep to doing quarterly or even monthly tax planning. So typically what I see a lot is waiting until the year ends. You have a very limited window for how you can lower your tax bill. There's really not much you can do that's going to critically change it. Whereas if you're running quarterly projections or monthly meetings, you can implement changes well before the December 31st cutoff time. So you can implement things and you can shave 25, 50, 75% off of your tax bill because you did it in the time frame that you could. So I had this one client who had come to me in January who was going to pay a $117,000 tax bill for the previous year. Identifying just 3 to 4 of some of the above structural changes he could still implement this year. And by his next tax bill for next year, his tax liability is going to be down to 58,000 if he makes the same amount of profit and the same amount of revenue again this year. It'll save him almost 60 grand in taxes with just a few weeks of proactive planning. The point is, these aren't complicated, time-consuming optimizations. These are structural changes you set up once and they work for you automatically for years down the line on autopilot. Now, you might be wondering if this is so simple and effective and it works on autopilot, why isn't my CPA already doing this for me? And that's a great question. Traditional CPAs usually make their money by filing as many tax returns as possible during the tax season. They're incentivized to do the minimum work necessarily to stay compliant, so they'll charge you 3,000 for your return and then just move on to the next client. They mostly are just focused on the compliance piece, just making sure that it's filed correctly and that you don't get any penalties. But they disappear after April because honestly, doing this for hundreds of clients, it burns them out and they're not getting paid to talk to you in July. So they have no interest in helping you out. That's why you get surprised with big tax bills all year long. And while they can do some of these simple things like the S Corp restructuring, they have their limits. It's not that they're bad people or they're trying to scam you out of money. Their business model, it just doesn't support proactive year-round tax strategy, which is exactly what you need as you start to get into low to mid seven-figure years. So that's the simplest way to save 50 grand in taxes as a $1 million plus service business. You make a handful of changes, set them up once, and you let them work for you year after year. Now, you could try to implement this all for yourself, but here's the reality. If you're not already structured optimally, you probably don't know what you don't know. You could miss critical details that trigger an audit. You could set up your S Corp wrong, or you could implement a retirement plan that doesn't fit your situation. And the opportunity cost is that every year you wait on this, and as you grow your revenue, grow your business, there's another 50 grand you're leaving on the table, or 75,000, or even 100,000. That's why I want you to click the first link in the description right now and book a tax savings assessment call with me. Here's what we're going to do on that call. I'm going to review your last 2 years of tax returns and your current P&L, project your current year tax liability for the 2026 year, and build you a custom 12-month tax plan showing you exactly how much you can save and what you can do to implement that going forward. We'll go through everything in a 60-minute strategy session completely customized to your business. Just a clear roadmap to save 30, 50, or even 75,000 plus in taxes over the next 12 months. So if you're an agency owner, coach, or consultant doing over 500 grand a year and you're tired of overpaying taxes, click the first link in the description, book your tax savings assessment, and let's build your plan. Thanks for watching, and I'll see you in the next video.